मेरे सभी साथियों को प्यार भरा नमस्कार. Let's continue the lesson, the topic which we had done in the earlier videos, the redemption of debentures. This video we will be taking up the second method of redemption. I have charted out the methods in the top left, as you can see. The last video which I had uploaded, it had discussed about how to redeem the redemption debentures in lump sum method, which I had already uploaded. This video I have taken a numerical based on by draw of lots in an installment. Okay, so let's have a look into the question. X Limited issued 50,000 8% debentures of 100 rupees each on 1st October 2011, which will be redeemed in 5 equal installments starting from 31st March 2015. It was decided by BOD. BOD means Board of Directors. They are the important persons who take essential decisions in the company's affair. To transfer to debenture redemption reserve 6 lakhs and 4 lakhs on March 31st, 2012 and 2013 respectively. The balance required will be transferred to debenture redemption reserve on 31st March 2014. Ignore interest. So, first understand the question. It is very specifically mentioned that X Limited has issued total number of debentures which is 50,000 that carried interest of 8%. Their face value or alternatively known as nominal value is 100 rupees and the date is 1st of October 2011. Now it is also mentioned in the question that this has to be redeemed, that means repaid in 5 equal installments, and that installment starting from 31st March 2015. Then it is again mentioned in the question debenture redemption reserve. I just let me have a very quick revision on this debenture redemption reserve. This DRR is nothing but a reserve which is created out of profit to meet the future redemption obligations. Another way, as per the rule of Companies Act, when we create DRR, in the same time we have to create DRI also, debenture redemptions investment, right? And that amount should be 15% of the redeemed value. जो भी वैल्यू आप रिडीम करने वाले हो, रिपेड करने वाले हो, you have to calculate 15% of that amount. And but in this question we are given the debenture redemption reserves amount and the date also mentioned. Okay, and interest we have to ignore, because usually what happens if there is a debentures is there, so as per the law or terms and conditions of the debentures, interest has to be paid, either half yearly, quarterly, yearly, whatever. But in this question it is mentioned not to enter any record of interest. So let's have a look in the working note first. As you can see the question, 50,000 number of debentures with nominal value 100. So a received amount of application is 50,000 multiplied with 100 gives you 50 lakhs. Now this amount has to be paid in 5 equal installments. So how to calculate 5 equal installments? Whatever the amount we have received, we will divide it by 5, because we have to calculate 5 equal installments. So 10 lakhs. 10 lakhs is the amount which we have to pay every year, and these equal installments has to be starting from 31st March. So our first repayment of 10 lakhs on 31st March. In the same manner, second repayment will be on 31st March 2016. Then next to 31st March 2017. Then next 31st March 2018, and the last is 31st March 2019, because if you start counting from 2015, 15, 16, 17, 18, 19, in the year 19 your 5 equal installments will be completing. So now as the rule goes, this DRR and DRI is nothing new, already mentioned in the earlier videos, and I am repeating it again for you if you skipped to see my earlier videos. That the rule says, the rule is very clear about this payment thing. As per the rule, at least 15% of the nominal value, okay, value of the debentures to be redeemed during the financial year. This is the one rule regarding relating to the DRI. And for the DRR, at least 25% of the value of debentures to the debenture redemption reserves has to be transferred before the redemption. So I have shown in the working note earlier that 25% of the redeemed value, that is 10 lakh, because yearly we are paying 10 lakh. So 25% of 10 lakh gives you 2,50,000. In the same manner, 15% of 10 lakhs gives you 1,50,000. So this we have already calculated. And balance of DRR, this I will explain you in the video later. Let's start the question. This is the format: date, particulars, ledger, folio, debit amount, credit amount, nothing new. So year 2011, because mentioned in the question that on 1st of October 2011. So October 1st 2011, bank account debited to debenture applications and allotment account. The amount is 50 lakhs. Already we have calculated this amount in the working note, right? Second entry, see, although I have not written narration, but you have to write the narration. Narration is nothing but the short description of what transactions you have passed. So narration is important and you have to write the narration. Like in the first entry, the narration you can write like being application money received. Second, debenture application account, debenture applications and allotment account debited to 8% debentures, which is 50 lakhs. Here the application money transferred. Then on 2012 March 31st, because it is mentioned in the question itself, it is mentioned that 2000 March 31st 2012 and 13, 6 lakhs and 4 lakh has to be transferred. So surplus in statement of profit and loss account debited to debenture redemption reserve account 6 lakh. The entry you may pass that being DRR is created from the statement of profit and loss account. In the same manner, 2013 March 31st, surplus in statement of PLN account to debenture redemption reserve is 4 lakh. So this 2 year we have completed. Then in 2014, because it is mentioned in the question 2012 2013, the balance required will be transferred to the debenture redemption reserve. So the balance amount which is required. So how much we required? The 25%, right? 25%. We have calculated here 10 lakh 25%, that gives you 2,50,000. All right. So 2014 surplus in statement of profit and loss account 2,50,000 to debenture redemption reserve account. This amount we have passed entry because it is mentioned in the question that 2012 and 2013 that much DRR you have to calculate. But in 2014 the actual amount you required for redemption, right? That you have to transfer in the DRR. And this amount how we have calculated, it is nothing but the 25% of the redeemed value of debentures in a year, which is 10 lakh. Then 31st March debenture redemption reserve account debit to bank account being 15% redeemed, right? That DRI, that is the amount which we have calculated here, 15% of 10 lakhs, that gives you 1,50,000 here. This entry have passed. Now on payment has to be start from which year? 31st March. So as 31st March 2015, the normal entry will be passed. 8% debentures account debited to debenture holders account. The entry you may write that amount due on redemption. Then on 31st March debenture holders account to bank account. The entry you may write like being payment made to debenture holders of 10 lakh this 1 year given. Then in second 2016, 8% debentures account debited to debenture holder account, the same amount 10 lakhs, because every year 10 lakh you have to repay, है ना? That 10 lakh has to be redeemed. Then on 31st March debentures holder account debited to bank account, 10 lakhs paid off. Then in 2017 again the same entry, debenture 8% debentures account debited to debenture holders account being amount due for redemption. Then on 31st March the same year 2017, debenture holders account debited to bank, that means 10 lakh is paid off. 2018 again the same entry. This is the fourth year because 5 equal installment we have to pay. Fourth year 8% debenture account debited to debenture holders account 10 lakh and debenture holders account debited to bank 10 lakh paid off. So till here fourth year completed. Now the fifth year we have to be little cautious in this year because this is the last year. Okay? So on 31st March you have to make an entry bank account debited to debenture redemption reserve. This amount, this entry we are passing because if you remember in 2014 we have made an investment, right? Now this is the time in the last redemption year this amount has to be encashed. The amount which we have invested, that amount will be received, right? Encashed. Therefore bank account debited to debenture redemption reserve account 1,50,000. Again these two entry will be similar. 8% debentures account debited to debenture holders account 10 lakhs, debenture holders account debited to bank account, it is paid off. Here your narration will be debentures for redemptions due. Here the payment has been made. And the last entry on 31st March on the fifth year in the ending, you have to transfer the balance amount of debenture redemption reserve account into general reserve account. This is also the part of a rule which is already mentioned, right? So debenture redemption reserve account debited to general reserve. Now 12,50,000, how this amount we have calculated? So here I have done the balance of 6 lakh plus 4 lakh plus 1,50,000, sorry, 2,50,000. Now if you see the entries here, wherever you see this amount DRR 6 lakh plus DRR 4 lakh, okay, both credit side, and again it is again credited 2,50,000. 6 lakhs plus 4 lakhs 10 lakh, 10 lakhs plus 2,50,000 gives you 12,50,000. So this is the amount we have transferred into the general reserve. So it is also part of the rule, when whatever the balance remain in the debenture redemption reserve, that amount has to be transferred to the general reserve in order to close the DRR account, because this is the 5th year and all the debentures are paid off. 10 lakh is the amount which we have paid equally in installments.